Hi YouTube, this is James. It's Friday the 23rd of October 2020. I'm just getting on here to announce or share what I'm doing. I haven't done a video in a little while. I've been busy playing basketball and doing all kinds of stuff with a bit of a difficult personal life, but we'll leave that for another video. But I'm going to be going live trading with my own account, smallish account. I won't share I want to keep certain details off of YouTube for now for various legal reasons. And so I will be using this plan. Now bear in mind, this plan is what I used to pass the first combine and get funded in, I think it was August of 2016. Then I lost that account, danced around, got funded by a friend that didn't work out well because of the pressures involved. Then came back to funded started again around March or April, if I remember rightly, 2017, and was funded by December. So the Top Step Trader path has helped me in as much as hold on a sec. In as much as it has helped me to develop that consistency. And this is the method that I use. Now, bear in mind, the method that I used, I've adapted it. Before, the GM method was essentially the same as what I'm going to show you now, but I was using it on 5-minute Forex futures charts. So that was the 6A Australian dollar versus the US dollar, 6B Great British Pound versus the US dollar, and 6C Canadian versus the US dollar. Those are my three pairs, and I would use those along with YM as well, the Dow Jones 30, the the E-mini contract, $5 per tick contract. So I would use those three Forex futures futures instruments, along with the YM, and that on a 5-minute chart, I would look for reversal candlesticks around the 30-minute golden mean pullbacks, and that was it. Had a rule for getting where my stop would go. I had certain stops based on volatility for each one, more or less the same, just adjusted for the volatility of each instrument. And targets were what I called 5BPT, beyond pivot target. So or before pivot target, 5BPT, if I can spit it out. So 5% before. So if you had a run up, if for example, I'll give you an example. Let me pause the video for a second. Okay, so if you had a move, let's say this is the 5-minute chart. Let's draw up here. Let's say your 5-minute was like that. Your 5-minute is here and your 30-minute is over here. Let's do it over here where there's some white space. So if on your 30-minute you had the 38.2 and the 61.8 pullback here, you're starting from here. So price moved up and now it's coming down. This is the 38.2, but you don't see reversal candlesticks there, or you do. If you do, then you go to the 5-minute. If you don't, and you do here, you see a reversal candlestick at the 61.8. Then you go over to the 5-minute chart, and if on the 5-minute you also see reversal candlesticks. Now bearing in mind there was a caveat, you would have some volume involved, like if I see 5-minute candle and I see you wouldn't see this, of course, if you're taking it on the candle, so ignore this. But that would be a confirmation. If you see a spike in volume, a divergence, prices coming down, volume's going up, and it's at least 200% of the prior X, what I call trees. Like this is why I say 2-wave and trees entry. I'll explain in a second. So the volume is of a certain height, and then you get a spike, which is greater than 200% or 150% or 250, whatever you choose. I choose 200. Greater than the prior, say 5, average of the prior 5 candles. So that's what I refer to when I say tree. Visually, you'll see what I mean when I go to the chart. If you see that, you take the long, stop under there, or X ticks of stop. And what I meant by 5BPT, 5% before pivot, is if we were going here, let's say on the 5 minute, there's a pivot here, there's a pivot there, and there's a pivot there, and then you go down here. If you're going long here, then I would go 5% before. If I'm measuring, say, from this pivot down to here, I'm going to go 5% before this pivot as measured from the whole of this move. And that's just for wiggle. So I'm basically targeting that swing high. But I digress. This is getting off topic. So that's what I was doing. That's how I passed in December of 2017 and August of 2016. And then life got in the way. So now I'm back. Same method, but on the ES, as you can see here. And 5 tick stop. So that's $62.50 or 66.48 with the commissions I'm going to be having on the lifetime license. So per contract is going to be 66.48 risk per trade with those 5 ticks. I won't, as I said, share the account size, but it's sufficient to absorb, of course, very big string of losses. Well, not very big. It's not. I'm not doing 1% per trade, that's for sure. It's substantially higher, but it's nothing stupid. It's manageable. I'm going to have a method to get out of that sort of incubation period where the account's a little bit on the small side, but it's definitely doable based on the backtest results. So I'm looking for 2 wave entries at GM levels, 38.2 as we said, and 61.8. Targets back to the 61.8. That will make sense when I show you. Or 1.38.2 or 1.61, 1.382 or 1.618 of the range breakout. So we'll get to that as well. Or maybe I'll just cover that here. So what I mean by that is if price is doing this, I'm using just the one chart. It's the 1 minute chart. That's not written here. ES 5 tick stop 1 minute chart. Exits trails at 2 points or greater with reversal candlesticks or structure. So because 2 points against the 1.25 points gives us a positive risk to reward, I've just back tested it. 2 points is something that's frequently obtained coming out of these entries. If you've got a range on the 1 minute and you happen to get a signal 2 wave entries here or wherever, and it's respecting a golden mean level, you go long, 5 tick stop. The target will be 1.382 or 1.618. We'll just go over here and point here out as measured from the range breakout. There's that, or there is simply if you've got a long here, let's do another example. You got along here, then you would measure the 61.8 back. So like the halfway back, instead of halfway back, we're looking for 6.18 back, so a little further than halfway. If candles come in before such price, assuming it goes in favor, you start trailing as long as you got 2 points or greater, and either you'll get that or you'll get the 61.8 back, or of course it will just roll over and stop you out. So that is the method in a nutshell. Let's look at some examples before I end this video. So for example, here we have, if you viewed, say, like something like this as a range, see it here, you got this up here, that's a range, right? So if I was to use the Fibonacci extension tool, go from high 47.25 to low, we're going to use this one here because this is part of the range. So it's a little lower than this. The low is 36.25. Go back to 37.25. That's close enough. 28, 29. Then you see these levels here. Let's just have a look and see. Yeah, so this is the 1.618. When it comes down once, doesn't do it there. Yeah, you could. No, that's a big spike on the down candle, so you can't get this little candle. When it comes back up and does this, you go long there, 28.75. That's at the zone. What would the 61.8 back be? I've measured from the last swing high inside the range down to the low, and the 61.8 is here. So that would be your target, which is just about here. Now let's have a look at an example. This is a range. This is not inside the range. This is back from a 61.8 or a 161.8 extension. But other examples might be, for example, let's take all that off. If you measure from here to the low, we're looking for a two-wave in trees. So that high there, see where we are there? Let's see, 24.5. It looks like it's 47.2 and a quarter. So we're nearly there. You look and you say to yourself, do we have a two-wave move and volume exhaustion? No, we don't. So we can't do that. Let's go ahead with the replay. Where is it? I'm not even connected to replay. So let me just pause the video. Okay, so we're back. So you would look for price to go. I would look for a two-wave move with congruent volume back to this. I don't know if it's going to happen. I can't remember. Let's see, because I'm going through back testing, but that's what you would do. So there you go. Let's look and see. We've got two moves, but the volume, this spike is higher than this, so you wouldn't do that yet. Unless you're looking for, no, so you can't do that. Let's carry on. Now this here, you got one move up on this volume spike, one move up on this. If you get a reversal candlestick up here at 38.25, we're not quite there, but this is up to you with discretion wise. If I got another move and reversal candlestick, I'd definitely be going short there as per the rules. So let's see. I can't remember if it gets back up there or not. And my time would end 9 o'clock anyway, and that's 9 o'clock there, so I wouldn't be doing anything at that point. But that's the method. I'll see if I can pause the video and find an example that does actually work, because that didn't quite get there. So I'll pause the video, just find one that does fit the rule set, and then we'll see. I'll end the video there. So pausing for now. Okay, so very quickly, let's catch this real time. So I will be beginning at 6 a.m. here, Central European time here in Italy. First, I need to get up that time, so that's going to be a bit of a challenge given my current sleep schedule. But what I would do is I'd go down like this. I would also look for this as well. Then we just let it play. It's quite simple, boring. You go forward. I'm speeding up here, but you'd have to sit through these minutes. So that level is no longer valid because we've gone down lower. So at that stage, I would be moving it down like this, just so that it coincides. Then I remember what happens here, but I would be looking for the two waves and trees. So there is a first wave, potentially, and you could have, let's see, you could have considered this a second wave. There's this volume spike. You could short here at 88. If your target was greater than 2, you never got there. Dependent on your management, I know this stops out, but This for me wouldn't be considered a second wave on this, but depending on how you measure it, you may have got in there. I wouldn't. And then it's going up, it's going up. I'm still assuming that this is chop based on the structure. So this is not the second wave, a first wave and a second. It's still part of this chop before it moves off, if indeed it's going to move off. So whether it went down from here or not, I would just ignore this. And now what I'm looking at here is I'm seeing it this way. Maybe a two wave if you want move, or just a single move. This is all chop, as you can see by the overlap. Differing colors of the bars overlap wicks. This is the first time where we see a change in structure. It's all overlap and chop here and wicks. So the color of the bars count, the length of the bars in general, apart from this one here and these two here, they're all kind of relatively smaller. There's no consecutive greens to show a breakout. There's a lot of wicks. So this is the beginning for me. Now I would be forecasting, I wouldn't be looking for this. So let me get rid of that. Hold on a sec. I would not be looking at this as the level, because it's got to move into the level, not come back. This level measured from here down to here, we've already come this way. So going this way, I need to be measuring from here down to here. So in a nutshell, this is the level. I can take it as low as say 91-ish. So I'd be looking for we got the volume spike here. I'm going to look for another tree here that coincides with this level. So let's move forward. There it is, right? Here you can see, let's just pause that there before we miss out. Here you see this volume spike that coincides with this. Look at the green bar. We began here, just like how we began here. So if you remember, now I've moved it now, but we had this like this. This one we can have like this. So it just becomes recognizing structure. If you also measure, you will probably find that this is a measured move as well. If I like go from here to here and I go from the equivalent place, well, you should be going from there if you're going from here. But if we go from the absolute low to the absolute high, you might find that, yeah, just before the breakout, the last low before the breakout, you could do that as well. It's still the same. It's right there. So that's a measured move as well. But that's not what I'm looking at visually. I'm looking at this candle and this candle, this move and this move. When you zoom out, it will be more apparent. 1, 2, with a whole bunch of congestion. Just look at the change in structure. We've got the candle here, so I would be going short at 91, as I said before it even got there. So let's play it and see if we can capture that 91 for demonstration purposes. I've already got the order. I don't even know if it goes back now. Let's see. It doesn't. I remember it doesn't, but we went past it. But anyway, you'd have 91. The stop would be 92.25, 5-tick stop. The target would be 61.8 back. So I go from this low to this, and my target would be 88. So let's see what happens. It does eventually. There you go. You would have got 3 points for 1.25 risk. So this video is already 19 minutes long. We'll end it there. That's the type of thing I'm going to be doing. Had that formed a reversal candlestick, for example, here we got 91, right? This is 1.75. I wouldn't get out here because it's not quite 2. But if that had formed lower, I would elect to get out or defend before getting to that golden mean level. So 19 minutes, 25 seconds. That's it for now. Back it in the next video.